The first part of the overview of integration with other SAP modules section will give you an overview of the organizational structures of cost accounting, such as controlling areas, country-specific chart of accounts, and controlling objects. You will also learn about the integration of financial accounting with materials management in this first section. Let's first find out what a controlling area is. A controlling area is a self-contained organizational structure for which costs and revenues can be managed and allocated. It represents a separate unit of cost accounting. A controlling area can be assigned to one or more company codes. If the assigned company codes and controlling area all utilize the same operating chart of accounts, it is possible to carry out cross-company code cost accounting between the assigned company codes. Let's move on and take a look at country-specific chart of accounts. As a great deal of activity takes place between the 4 European company codes, Germany, United Kingdom, Portugal and Spain, it was mainly important for the Internet Demonstration and Evaluation System, the IDES system, Board of Directors that all these 4 company codes belong to the same controlling area. As a result, they had to adopt the Operating Chart of Accounts International, INT, of the controlling area. However, in order for it to be possible for external reports to contain the account numbers usually used in the individual countries, a country-specific chart of accounts was created for the company codes Germany, the United Kingdom and Spain. These country-specific chart of accounts are structured in accordance with the legal requirements of each of these countries. Let's move on and discuss group chart of accounts. The 2 companies in North America were originally independent firms, but were later purchased by the IDES Group. Both companies were already live with R3. They were using the chart of accounts CAUS as the operating chart of accounts. Management determined that since cost accounting for Europe and the USA together was not necessary, it retained the operating chart of accounts CAUS for the 2 US company codes and assigned them to a separate controlling area. For consolidation purposes, a group chart of accounts was set up for the 2 operating charts of accounts. Now let's go on and take a look at controlling objects. A controlling area contains controlling objects. These objects take on various functions within controlling, such as internal orders, cost objects, networks, projects, cost centers, and make-to-order sales orders. Controlling objects are again classified into true statistical controlling objects. True controlling objects can allocate their costs to other controlling objects. Statistical controlling objects cannot reallocate their costs and only bear their costs for informational purposes. Let's have a look at how financial accounting integrates with materials management. Materials management, MM, uses the company code from financial accounting, FI, the plant from logistics, general, and the purchasing organization and storage location from materials management to define its enterprise structure. Purchasing organizations are required to enter data specific to purchasing in the vendor master record. Procurement transactions are posted in financial accounting through the 3-stage verification procedure. You don't know what these are? Let's continue on and we will find out in detail. First of all, plants. A plant is the central organizational object in logistics. Many plants can be contained in a company code. This means that many plants can be assigned to the same company code. Let's consider the example of the IDES company code 1000 for Germany. As shown in the image here, the plants in this company code are 1000 for Hamburg, 1100 for Berlin, 1200 for Dresden, 1300 for Frankfurt, and 1400 for Stuttgart. all company code relevant transactions from these plants are posted in company code 1000. Now let's go and take a look at purchasing organizations. The purchasing organization purchases for the plants. It's legally responsible for completing purchasing contracts. Each country in which IDAS plants operate has one purchasing organization. They purchase for all plants in the country and post the purchases in the company code of that country. Let's again consider the example of company code 1000. The purchasing organization 1000 takes care of purchasing for all Germany plants. That's Hamburg, Berlin, Dresden, Frankfurt and Stuttgart. Postings are then made in Germany company code 1000. Let's find out why it is essential to enter purchasing data in the vendor master record. As depicted in the image on this slide, vendor master creation includes three settings: general data, company code settings, and purchasing organization settings. The purchasing organizations purchase goods and services from suppliers, who are paid by accounts payable. The various purchasing organizations of the group have to enter data specific to purchasing in the vendor master record before the supplier's master record can be used. Let's now take a look at posting procurement transactions in financial accounting. The standard procedure for posting procurement transactions in financial accounting comprises a three-step verification procedure. Step 1 involves creating a purchase order. This transaction is completed in Materials Management and no postings are made into financial accounting. Step 2 involves the creation of the goods receipt. To update the inventory, a materials document is created in Materials Management. Simultaneously, a document is created in financial accounting, which the value of the goods is posted to the materials account, a debit, and the goods receipt invoice receipt account, a credit, in the general ledger. The third and final step in this three-step verification procedure involves the creation of the invoice receipt. The vendor invoice is posted in Materials Management, which automatically creates a document in financial accounting. And the financial accounting document contains the invoice amount that is posted to the goods receipt / invoice receipt account, the debit, and the vendor account, the credit. The last two steps can be interchanged depending on the order of the goods and the invoices are received. The goods receipt and invoice receipt account ensures that goods were received for each invoice and vice versa. Now that we have an understanding of how Materials Management integrates with financial accounting, let's move on to the second part of this section,